Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by James Henderson, manager of the Lowland Investment Trust, to give his 3 stock picks. Hi James.
Hello.
So what's the first stock today?
I was going to a big company, Anglo, much in the news at the moment, Anglo-American. The share price has fallen a long way in recent years. It spent money at the wrong time in the cycle, and it spent a lot of money on iron ore at the wrong time in the cycle. Just as demand, it came on stream just when demand was falling. But over the last period, it really looked at itself really hard, and it's getting out of iron ore. It's selling that operation, and it's focusing on what it's good at. And their best business, in my view, is De Beers, the diamond business. And I believe diamond demand does return as the middle classes across the globe get a bit more confidence. We'll see diamond prices pick up again, and they do control the market fairly well, and that is a really quality business. It doesn't require the Chinese building a new city. It just requires people a little bit of confidence on the high street, and jewellery spend goes up. And I think that business alone, we'll look back and think, gosh, you could buy Anglos with De Beers in there for these sort of prices in a few years' time.
And what's the second stock today?
The second stock would be a company, again, under the COSH, IPF, International Personal Finance. This is unsecured lending. It was a spin-out from Provident Financial a few years ago. It's unsecured lending in Eastern Europe and Mexico. It's had a problem, and there's always problems in the unsecured lending market with regulation, and its Slovak business has been hit. But over time, it achieves very good returns on capital, and it generates a lot of cash, and we get that cash back in share buybacks and dividends. And I think that it will get back onto that path. At the moment, because people are so worried about financials, the share price has come back. I think that's a real opportunity.
And how dependent on interest rates within the locality is that company?
Well, it's rather like Provident Financial is in this country. Because the actual lending rate is so high, a move of a percent or two on the interest rate doesn't have much effect. Their problem in the financial crisis was actually getting the deposit side, but they're well funded now. It's very strong on the funding side now.
And what's the third and final stock?
Third and final was Shoezone, a small company this time. It's around 100 million market cap, came to the market last year. It's on the high street, and its sites work in tertiary and secondary sites on the high street, and there aren't many retail formats that do work there at the moment. So what they're seeing is rents fall, and yet they can trade profitably at these higher rents. So over time, they'll grow that estate and on lower rents with a profitable franchise. I think that again they will generate cash, and they have so far. Since they've come to the market, we've just had getting a special dividend from them already. So this year with the special dividend, they'd be yielding about 9. It's a good, solid business.
And a lot of retailers have been hit hard by e-commerce. Is that a threat to Shoezone?
Well, they've got an e-commerce business. In the end, shoes is something you like to try on, and that's the good thing about having a big estate and building that estate. You know, you'll see that Shoezone sign, and you'll go in there. But they can grow an e-commerce business, so it's an opportunity as well.
James, thank you very much.
Thank you, Emma.
This is Emma Wall for Morningstar. Thank you for watching.